Welcome to Aliasoft webinar. My name is Alejandro Delgado, and thank you for joining us today. This will be the first session of a series of webinars with the topic Energy Markets in the Recovery from the Economic Crisis. If you have attended our webinars before or look at the recordings, you may know some of the speakers today. From Aliasoft, we have Uriol Saltó, Data Analysis and Modeling Director. From Ban Sabadell, Roger Font, Projects, Assets, and Specialized Businesses Global Manager. And from Engie, Daniel Fernandez, Head of Energy Management. If at any time during the webinar you have any questions, please use the Q&A menu and we will answer them after the presentations. And now, I hope you enjoyed the webinar. Uriol, please, can you share your slides?
Good morning, everybody. Thank you, Alejandro. I'm Uriol Saltó. I'm in charge of data analysis and data modeling at Aliasoft, and I'll be the first speaker today. So I'll need to share my presentation. Let's see. My slides are here. Okay. So let's start. So this is the outline of the talk and the content of the whole seminar. Basically, I will focus on describing the evolution of the energy market during, well, in previous webinars, we already described how markets behaved just in the middle of the crisis. Now we are more focusing on the recovery part, to see how they are recovering, and then obviously talk about the future perspective and how we are seeing it at the mid and at the long term. A few words about Aliasoft. We offer forecasting services for the energy sector, covering basically all the energy markets in Europe. Our forecast goes from the short term, so minutes ahead or day ahead markets, up to the midterm and the long term for 20 or 30 years ahead. We basically analyze and forecast any variable that is useful in the energy sector, so demand and price of the energy markets, renewable energies, portfolio demand of a given portfolio of clients, any other variables, weather variables, everything that influences on the energy markets, and not only day ahead markets, but also ancillary services, imbalances, technical constraints, etc. Our methodology is based in Alea model. It's a model with a statistical base. It's a hybrid model that combines several techniques, classic techniques like regression, econometrics, time series analysis, Boggs-Jenkins analysis, and also artificial networks, artificial intelligence through neural networks and machine learning algorithms. The main strength of our methodology is that it is scientifically based. So all the professional staff in Aliasoft have a scientific background, and we have a lot of expertise in the energy market. We've been working in all the European markets, starting with the Iberian markets, where we have more than 20 years of experience. Also, our forecasts are consistent in time. That is something that is needed in also to be consistent in the viability or the assessment of the projects at the long term. So what we about the pandemic, we already know. We have overcome what is strictly the health crisis, public health crisis. So that it happened between March and May, maybe also June in some countries. So we are most of the markets and countries in Europe are returning, let's say, returning to this new normality that where we still have in place a lot of measures in order to prevent the spread of the pandemic. We expected the high temperatures, humidity, more life in public spaces. We expected the summer to be quieter in terms of the pandemic, but we've seen in a lot of European countries outbreaks of the pandemic, new outbreaks. So what we expected to be a quiet summer, it hasn't been so much. But looking at autumn, it's where the midterm, where the uncertainty is present. So schools are opening again. A lot of people is coming back from vacations. So let's say the normal economic activity is trying to start again. So we are not sure about how the pandemic will evolve, because we know for sure that the vaccine or a cure will not be present at least until the end of the year or until next year. So this uncertainty that we were already expecting in the autumn is still present. So, and this, as we will see, have an impact of the future perspectives in the energy markets. So let's see how are behaving, how are recovering the fuels and CO2 emission prices. Starting for the Brent oil, let me see if I can show you my pointer. Okay, so this is where we are now, the year today in 2020. We are still close to the bottom, the rocket bottom that we hit in March or April. Looking into perspective, we are at the lowest prices of the last 15 or 20 years. And if Brent is recovering, why we are still in the year today so close to the bottom that we hit? Well, as we can see in the last, we experienced a huge fall in March, and then we started recovering couple 5-6 weeks afterwards, but somehow the recovery gets stalled here around $40 per barrel. So basically we are stuck at the year today that we have at that time. So it recovered fast. Somehow it's stalled, stagnant at this 40, 45. And lately, in the last 2 weeks, we see a fall, but we will see how it will evolve. We are not expecting it to go too much lower. Looking at the gas, we already have seen, we already know that the gas prices were falling since the end of 2018. We experienced a huge fall in mid-March, again due to the pandemic, and around June, July it started recovering, and it started recovering quite fast. Last week it looked like it didn't grow too much, but we can see that we are still in the middle of an important rise in the price. CO2 emission prices also had a panic drop in mid-March, huge drop in the prices, but it already recovered. It is already above previous prices. So we see that the new equilibrium is this around this 27 euros per ton of CO2. Looking at the electricity markets, let me remind you that you can, in our website, you can find the energy markets observatories. We have, you can find there the evolution of all the variables of every market for the last weeks, in week comparison, hourly comparison, daily comparison. We have most of the European markets, and also gas, oil, and CO2. And we are also preparing a platform plus for our clients. You will have more options in order that you will be able to access the history of all the history of all the variables and making more advanced analysis of comparison, correlations, etc. So looking at the demand, we starting in February, we have seen how in March and mainly in April and May, depending on the country, we hit the bottom of this crisis. Most affected prices: Italy, Spain, France, and UK. Other countries were less affected, but you can see that around 10–20% fall in the demand. That's what we have already seen. About the recovery, what we are seeing, the recovery has been important during the summer in all the countries. Some of the countries even exceeded the demand of the last year. It's also important to mention that this increase in the demand during the summer has well, the high temperatures, quite high temperature, or higher temperatures than last year during this summer had an impact of this in this recovery of the electricity demand. So what we are seeing here, it's not completely due to the recovery of the crisis, but also due to the impact of the high temperatures during this summer. So, but we can see that we are still, in general, below the levels of last year. Something quite similar, looking at the prices, we see that in this case, already in February, when we had no pandemic, we were also very or quite below prices of last year. We reached the minimum in April in most of the countries, and we have seen a recovery during the summer. Right now, most of the countries are quite below levels of last year, around 20%. France is an exception in this case because it has some issues with its nuclear production. Belgium basically pulled by France, but we are still 10–20% below the prices of last year. So this is how the recovery looks like right now in the electricity markets. So looking at the future markets, you can see here the comparison of how the forward curve of the futures of Brent oil evolve since just before the drops that we see in mid-March, the minimum that were hit in April or May, and how we are right now. And we can see that even in the short term and at the long term, we are basically at the same point where we were before the crisis, and at the mid-long term, we are already reaching the same level. So basically the expectations for the traders right now are quite similar, the ones that were just before the crisis. At the long term, you can see that basically the equilibrium point of the market at the long term did not change even during the worst time of the crisis. It's around $55 per barrel. Looking at the gas, we have pretty much the same picture, even more. You can see that even at the mid-long term, the situation has not changed during the crisis. In the short mid-term, we have seen how obviously futures decreased while the spot pricing was decreasing. But right now, you can see that the lighter and the darkest and the lightest curve basically are overlapped, even at the mid and the short term. And obviously at the long term, 15 euros per megawatt hour, the situation has not changed. Sorry. Looking at the power market futures, what we, if you remember of previous seminars, we have seen how we had a panic drop in mid-March when the lockdown measures started in most of the European countries. Following the huge drop in the CO2 prices, market electricity futures already dropped. We had a kind of a recovery, but it looked like, looking at with some perspective, that the price decrease that we were having since late 2018, we were still there. So prices decreased again, and went back to lower levels. But then, starting in June, we start to see a clear, we can see it is quite clear, upwards trend. France is going its own way due to its nuclear issues. So, but basically, after recovering and going down again, what we now see, thanks to the gas and CO2 prices, to the oil prices, we are seeing a consistent, constant upwards trend in the prices. And looking into the future, first, what we already have are the final Q2 results for the European European Union countries. Basically, they're confirming the advanced results that we were having by the end of July. In the Union and Eurozone, Q2 GDP go down nearly 15%. This is the largest drop in history, or at least since we are seeing since we have data. The largest drop was in Spain, more than 22%, followed by France, Italy, and Portugal. And on the other end of the list, we have Ireland, where its economy only, let's say, only dropped by almost 4%. So obviously, this is having a huge impact. It already had a huge impact on the electricity demand. This is how our demand forecast for Spain in this case evolved, but it's we are showing Spain because it's where one of the most affected countries, as we have seen. And you can see how before the crisis we were expecting basically the upward trends that we were having last year. Then 2020 demand forecast started decreasing, then decreased 2021, then 2021 started recovering, and now 2020 is the forecast is a little bit higher than we were expecting in the middle of the crisis. This is one of the reasons is because not because we are expecting a much faster recovery of the economy, but because we had a very hot summer, as I said, so the demand increased quite a lot. So right now we are seeing a fall in the demand for the whole year around 5%. The forecast right now it's a fall of around 5%, depending on how the winter starts, can be 6, 4, 5%. At 2021, it will obviously depend on how fast the economy is recovering, but it's around the increase, it's expected increase around 3%, maybe between 5 and 4, depending. And obviously, depending on the weather conditions, it can change. These forecasts are with quite extreme weather conditions, so obviously the variability is, the normal variability is lower. So what are the keys when we are forecasting prices in power markets? What we have seen, gas, CO2 prices are recovering. CO2 prices are fully recovered. Gas prices are recovering. We are in the middle of the recovery. Oil prices recovered quite fast, but they are somehow stagnant right now. But we don't expect or at least a fall, such a large fall as we already had during the crisis. But the main drivers, gas and CO2, are recovering or fully recovered. And they recovered at maybe a faster rate than we expected in the middle of the crisis. Electricity demand, as we have seen, is recovering, still below last year values. Thanks to this, thanks to the hot summer, we see an important recovery. We expect that it will, if everything goes as expected, this recovery will be kept during the rest of the year. And consequently, electricity prices have recovered also quite fast, thanks to demand, gas, and CO2 prices. But again, uncertainty is still present in the midterm. Uncertainty is quite strong. We basically because if there are a lot of outbreaks of the pandemic, or if outbreaks are large enough, if measures are taken again to stop the spread of the pandemic, then economic recovery can be highly affected. This obviously will affect the recovery of the electricity market and all the energy markets in general. Looking at the longer term, what we have seen is that the development of new renewable projects in the height of the health crisis, obviously it was somehow delayed due to the basically logistics of the construction of new plants, but also because of the uncertainty of the moment that we were right there. But as we see that just after the worst moment of the crisis, the development of new renewable powers is continuing a similar pace. At least in Spain, there are a lot of demand of access points to the energy grid. So right now, the national energy and climate plans look at least as achievable as they were before the crisis. At the long term, the market equilibrium, what we are seeing in the models, is basically where it was before the crisis. We have seen some things also similar. Fuels, in the gas and oil, we have seen how the long-term equilibrium is still at the same place. So about the feasibility of renewable energy projects, always looking at the long term, the idea is that if if the projects were feasible or viable before the crisis, at the long term, they are still viable right now. And just to remember that how important it is to have a robust, reliable, scientifically based and time coherent forecast in order to analyze the viability of these projects at the long and the very long term. And just trying to summarize everything I said, we have somehow overcome the strictly the health crisis, still battling against the virus, but the worst part of the public health crisis, let's say, it's overcome. We are in the middle of a recovery of gas prices, electricity prices, demand. We are basically recovering, but uncertainty is still very present at the midterm. So let's see how the pandemic and the economy and the energy markets evolve, still with very large uncertainty in the midterm. But in the long term, what we are seeing is that basically everything is where it was before. And just invite you to our next seminar, next webinar. It will be the second part of the webinar. It will be held on October 29th. In this case, we will have guest speakers from Deloitte. And basically, we will keep talking about the energy markets, how they evolve, and how renewable energy projects financing is going. Thank you.
Thank you very much, Oriol. Roger, now when you're ready, please, you can share your slides.
Okay, I'll just put the share screen 1 second. One second, because I don't see my presentation. Second. Okay, thank you for the opportunity, first of all, and thank you for all the people who have joined us in this webinar. Thank you, Aleasov. My name is Roger Font. I'm the global head of a special lending, which involves project finance, asset, and LBOs. I'm just gonna quickly talk about our experience in Iberia. and a quick summary of the renewable project in Banco Sabadell. I'm gonna be fairly fast so that there's time for Q&A at the end of the session. Banco Sabadell is the 5th largest bank in Spain, and if we talk about the structured finance, we do more than 300 deals a deal. We have more than 14 billion in assets and a team of more than 130 people. And we are in Iberia, France, UK, US, Mexico, Colombia, and Peru. Obviously, we do all these type of financing, but if we focus on renewables, our current portfolio is this one. Obviously, we have close to 2 billion in Spain, but then we have experience in the UK, in France. In Portugal, it's 6 million, but actually we signed a deal a couple of weeks ago, and we are expecting to sign a large deal in September or October. And then we are very active in USA, in US, and also in Mexico, but it's important the current situation in Mexico. Regarding Iberia, we were one of the most active banks, or the most active bank in the Iberian Peninsula, because back in 2018, we set up a risk framework which was pretty clear that the type of transactions that we could participate and structure. And we can participate in brownfield feed-in tariff, in merchant transaction, in auction, and merchant with PPA. And because of that, in 2019, we structured 32 deals. We participated in 32 deals, but out of these 32, 29 were structured by us. So we were the leading bank, and some of them we syndicated. The amount of financing was over 800 million, which amounts to 1.1 or 1.2 gigawatts. But if we take the whole portfolio of what we have participated, it's more than 2 gigawatts and 1.6 in financing. And as you can see from the graph, it's very diversified, the type of transactions that we did in 2019. So we did feed-in tariff in the Canary Islands, feed-in tariff in the Peninsula, which were some of them were bridge to bonds with the Banco Sabadell's team in DCM. We joined together, and then auction with PPA, auction without PPA, merchant, and merchant without PPA. It's important to note that we financed 7 merchants without PPA, pure merchant last year, which in terms of megawatts amounts only to 300 out of the 2.4 gigawatts of the total portfolio. And we do PV, but also wind farms, so pretty much it's 60-40. These are some of the more relevant projects that we participated. So some of the biggest sponsors in Iberia and some in the world. Now we have Excelio, we have Solaria, Aventon, well, some of them. But I think that what's most interesting and why you are here is what has happened during COVID and what has happened this year. Well, I think that what we have seen, I mean, from our side, from our bank, we have continued to finance renewable. We saw renewables as a long-term investment, and even though the prices of the electricity have dropped, we see it as a long-term. So out of these 20 deals, actually by March or February, we had only signed 3. So 17 of those deals have been after COVID. We had some deals that were approved before COVID, and we signed it with no changes after COVID. That's because thanks to the studies, well, we have our own view thanks to the energy curves of Aleasov and some other consultants, and we have a very good, strong sense of what we feel comfortable in doing in projects. Then, in terms of megawatts, it's more than close to 900 and more than 570. So this year, we think that it's gonna be in Iberia. It's gonna be close to last year, in which we financed 800 million. Probably it's gonna be a little bit more. Obviously, this year we don't have so many projects under the auction system in Spain, the 2016, 2017. But even without that, obviously we have a very diversified portfolio in which 26% it's merchant without PPA, 42 is with PPA, and 26 is feed-in tariff. And then, you can find in terms of amount. And in terms of technology, it's 50% wind farm and 35% PV. This is abnormal because we had two large transactions in wind farm. Actually, we structured the biggest merchant deal in Spain, which is a project by Enlight, 330 megawatts merchant wind farm, and also we participated in the CIP, in the Copenhagen Infrastructure Partners deals in Monegros with other banks. And these are some of the transactions that we have structured and participated. So you can see some of the biggest names in the industry. Last year in 2019, we were the #1 in terms of number of deals, not amount, because there are other banks that can participate in underwrite larger amounts, but we were, well, in terms of number of deals, we were the first ones. And as I said, the type of transactions in which we participate both in feed-in tariff transactions, brownfield feed-in tariff, which is a hot market right now. We participate with kind of structure under the auction system, PPA and non-PPA, which obviously these ones will be if there's a transactions, because there is no new greenfields on this one, but we have seen some transactions of projects already in production in which they have exchanged hands. And then in the merchant transactions, we can see PPAs and non-PPAs. What we have seen after the COVID in terms of the general industry is that the banks have continued with the strategies pre-COVID, in the sense that the banks that they were comfortable financing merchant, they continue to finance merchant, and the banks that only finance merchant with PPA investment grade, they continue to do so. So there hasn't been any really kind of change in terms of the approach. Maybe there has been a change on the base case, or maybe a little bit on the structure, but we think that the banks continue to feel comfortable with renewable energy, and they continue to do so. And every time there's more banks within that. Well, this is just, I don't want to go through details. Actually, as I said, the auction merchant and merchant PPA. And well, and basically that's what I say. As I mentioned before, as a conclusion, we think that the banks are continuing to find financing with minor changes maybe on the structure or on the curves that they use, but we continue to believe in the market and financing that. So from my part, that's it.
Thank you very much, Roger. I believe some of the questions will be focusing on your part of the webinar. But now, Daniel, if you're ready, please share your slides.
One second, that I don't know how to change that. I don't know if I have to. Okay.
Hello. Give me 1 second. So thank you, Alejandro, Julia, thank you very much. Sorry, because I'm in my desk in the office, and you know the protocols are demanding masks. So hello everyone, I'm Daniel Fernandez. I am responsible for wholesale energy markets and very involved in origination activities within ENGIE in Spain. And basically, I want to share with you our view from ENGIE on the topics that have been highlighted by Alea within this webinar. So basically, I hope you are already watching my screen. So, well, basically, you see a disclaimer as well, we are sharing market information, but obviously not at all guiding any investment decision. Quick wordings on ENGIE. Well, you know, we are a utility very focused on power, gas, renewables. And I think we are a kind of a bit special utility. Why? Because at some point we are also very focused on energy services business. A lot of energy, different energy solutions for buildings, for communities, for cities. So, you know, we are not just an utility focused on wholesale and networks, but also we have a strong business related to energy services. In terms of well, capacity installed, you can see here more or less we have a same capacity installed worldwide that the mix in Spain, for example. We are one of the main importers of gas in Europe, more than 1,000 tera. This production is, well, 1.5 times the demand of Spain, 420 terawatt year, etc., etc. And you see that we have a portfolio that we can summarize: half renewable, mostly hydro and wind, half gas, and we are progressing towards a greener and greener portfolio. Corporate-wise, ENGIE wanna lead the energy transition. This is our motto, our, as we say in French, our raison d'être, our reason to be here. We want to lead the transition to a world greener, a world in which people consume less energy, better energy, in favor of the planet. And then if we can make profit for that, fine. But if not, it is not the priority. The priority is basically ensure that we are transforming the world for better and to lead the what we call the zero carbon economies, which is basically specifically connected with all the energy transition programs that we are seeing these days, years, pre-COVID also, not only in Spain, but also in the whole, at least, European Union. You can see here what do we do in Spain. We have a quite relevant size, 2,200, 2,300 people located in the whole geography. And we are, we deliver all the services you can see here. You can think about ENGIE, well, you are traders, you are retailers. Well, basically we have capabilities to be present in any kind of solution related with the energy world. So we are able to design, to implement, to finance, to maintain, to enlarge whatever kind of business you can imagine, not only, but also not only related to industrial assets to produce power. So indeed, we are in our last business plan and in our current business plan, our corporate strategy is trying to push this ENGIE global solution, meaning that if a client needs capabilities on design, build, operate, maintain, finance, we are happy pushing that model. And I would say that the more complex the deal, the more capabilities for ENGIE to partnership and to succeed. As an example of what I'm saying, you can see here a summary of one of the projects we have done in the past, which is this Goya project. In Goya project, we have as ENGIE several roles. We are equitors with 15% of equity. We are the off-takers on a PPA that was the key enabler for the project. We are also giving energy management services and guarantees of origin services, etc., etc. So pure, what we call market agent services, brokering. And also we have given in the construction balancing of plant services, meaning that all that which was not the wind turbine, the windmill, have been designed and have been constructed by us. I mean, the substation, wiring, paths, etc., etc. This is our ideal project. When we think about PPA, financing, renewals, etc., etc., we have these different skills separated, but we do believe strongly in a model in which the PPA is part of the deal, but not the deal itself. We believe a lot in the industrial value of the operations, and in a wind farm, in a PV farm, you can see that there are value creation levels at the equity level, at the engineering level, at the energy management level, for the short term. and also the PPAs. So, well, for the last 3 years, we have done roughly following this model in many projects. In other projects, few of them, we are just off-takers and energy managers, so off-takers and agents. And we have done for the last 3 years, almost 3 years, we have done roughly 1 giga of PPAs with wind developers, with PV developers. And also we have transferred part of that position to mid-streamers, to other retailers, and to downstreamers. So I think we have a reasonably good expertise in terms of, well, dealing with this kind of complexities. Indeed, it's very rewarding to see Roger and Ruben in the past. Josep, we have partnership with good success in the past, and in some of the projects that Roger has shared. We are there as off-takers with Alfanar, with Forestalia, so that's we know them very well, and also with Alea. Well, we are working together as of 2004 in terms of modeling and forecasting and so on. So, well, very well done for these two houses. I will reinforce this idea a bit later. I start from the conclusions. Just basically, I am not going to enter in many details because a lot of information has been shared already by Uriol and by Rui. We fully agree with the first statement. There is a recovery, at least on prices. Forward prices are at pre-COVID values, 2020, 2021. Demand is not yet there. We have a lot of information in Uriol presentation, and we do agree that there is a cautious optimism in terms of we are recovering. What it is not clear is that what's going to happen in case there is a new major lockout or closing. But we think at ENGIE Spain, at the group, that the worst of the crisis is already behind us. The point is that what's the pace of the recovery? That's the big question mark. But for sure, in terms of prices, there is a recovery, and this has been a pure punctual conjunctural crisis. If we move from market view to finance, also, we think there are reasons to be optimistic. If you see, I put 2 or 3 smiles instead of 1, because as Roger has perfectly explained with examples, there is clear, there are 2 main forces pushing for more, for financing and for enabling the renewable projects. One is that there is a clear, pre-COVID, there was a clear political push to renewables, to energy transition, national energy plans, European Green Deal. There is a clear consensus that we will only recover this crisis by becoming more greener, by having societies more electrified, by increasing the power consumption, and therefore the production of green power. And also there's a consensus that we need to, the renewables are a pillar to overcome this crisis and to be prepared for the next crisis, because believe it or not, in 2030, 2032, more and more experts consider that there will be no North Pole. So the climate emergency has to be solved, and now we are much more in a hurry to solve the problem and to recover the problem. So clear political push, clear there is money there. There is money in the banks, and you have seen the number of deals of Roger. Congratulations, 32 deals 2019, 20 deals 2020, a lot of megawatts pushed, a lot of money from the banks eager to finance, a lot of money coming also, will come also from the public support, from the European plan, from the National Recovery Plan at country level. There were already plans in the countries, PNIEC in Spain, National Energy Plan. So there is a lot of money ready. There is a lot of money to drain from the public administration, although it is true that the political action seems a bit slow, or at least much slower than the rhythm that we have as industrial companies, utilities, developers. We are really much more ready to act than the public sector. I'm sure that the public sector or the politicians will do their job. But well, there is, I think, a kind of 2 speeds. No? So there is money there, so we shouldn't fear in terms of lack of financing capabilities. And it is very true what both Roger and Uriel have highlighted, which is the fact that this crisis seems really to have been punctual, conjunctural. Why? Because there is no major delay in terms of commissioning new projects, in terms of closing new deals during COVID, post-COVID. So targets of the national energy and climate plans, at least in Spain, but I think this is the trend throughout Europe, all targets seems to be perfectly in place. And well, this has been a kind of short-term tsunami, but not really. Well, it seems that there is no structural crisis so far. So we can be optimistic in terms of market recovery, very optimistic in terms of capabilities to finance projects, public and private schemes to push projects. In Spain, it is clear that there will be options before the end of the year. We don't know exactly the design. We can discuss whether this design will be very complex or more straightforward, and so on. But there will be public schemes supporting renewables. There are PPAs, as I have told you. You know, we have several off-takers, several companies pushing PPAs business. So there are tools to finance, and these tools remain there, and the appetite is still there, and the appetite is even bigger than before, because I repeat, renewables are a pillar to overcome the crisis. And then third idea, well, on future market prices and modeling and the importance of modeling that we highlighted in the title. Well, good news is that there are more and more public info for 7 years, 10 years, through which an off-taker, but mainly a developer can foresee or can anticipate the price that an off-taker will offer and will tender. So there is more and more public info on MIP, EEX, MEF, etc. And then there are more and more also modeling capabilities. And on this, our view is that we shouldn't be believers of one single scenario. We fully advise our potential partners. We wouldn't like to say clients. When dealing with PPAs, we say partners, to leverage always in 3, 4, 10, 15-year scenarios, medium, high, low, give probabilities to those scenarios, and then build a resilient, robust business case. These 3 variables I am explaining, they are very correlated, because at the end of the day, the internal rate of return is related to the view on the market, to the forecasting, to the market atmosphere, which is a short term, and also to the financing and the cost of financing. So these variables are very related. Our view in ENGIE is that we have very good reasons to be optimistic in terms of the equity, in terms of the capital there, in terms of the recovery of the markets. And also we do think that there are more and more, the market is really growing in the sense of gaining public info through which agents, developers can proxy what off-takers can offer and can put on the table. So we foresee, we are in favor of this optimism with some precaution, but we have reasons to be even more greener believers than 6 months ago. And for sure, this recovery will go through green. And then, well, in the last webinar, I mentioned some key issues on PPAs that I always like to put together in this kind of seminars, and there are 2 slides sharing them. I'm not going to go through my slides because they are quite self-contained. Basically, on this slide idea, recovery of commodity prices, as you can see in the different charts. And you can see, well, very relevant, this bottom right, you see the Cal 21 really at pre-COVID January levels, and the same in commodities throughout Europe. CO2 much more robust than others, but basically recovery of prices. Idea 2, as we see here, basically what we have seen with Roger, strong consensus that there is capability to finance and to make deals, no problem on the COVID. This rainfall of money should come, European Green Deal, 240 billion from the European Green Deal, 200 billion in 10 years for the PNIEC, 140 billion from the National Recovery Plan. So a lot of money to come, but please, politicians, hurry up in order to let us act as developers, as utilities, as off-takers. We need to really be agile. We don't have time to lose in this recovery. The banking sector very ready, and a lot of new technologies to come, and a lot of new developments to come. But again, we need a good, clear, robust regulatory framework landing all this. You see here, Red Eléctrica confirms this is capacity commissioned in Spain on August 1st, 2020. You see that wind and solar are growing. Okay, the target of PENIEC is 4 giga solar. At present, we see only 1.2 giga. 600 mega wind, target is 2 giga, but still there are 5 months to come. And we can see that more or less PENIEC targets are really there, and COVID is not threatening that. We can also highlight here the strong declining of coal, very accelerated by the high 26, 28 CO2 prices that we were seeing before. Last idea, and I am going to stop here a bit more. As I tell you, a lot of public information. We have OMIP here, MEF here. We have here mid-market curves, 10 years. So, in order to make a proxy of what can be offered, in order to make a business model of how a PPA can be valuable for me or not, because as Roger was saying, we can go merchant, we can go through PPA, and the PPA at some point is a kind of stopper or a kind of, let's say, handicap for the internal rate of return. But my point is that I encourage everyone to make robust business cases, robust models. How can we do this? I suggest from my empiric knowledge to start from this OMIP website, 10 years curve, MEF website. We can make here a 10-year average price. We should discount on that price 3-4 euro, which should be the margin for the off-taker. Obviously, this depends on a variety of things, cost of guarantees, clauses to be negotiated in the contracts, etc. But I put here some numbers as a reference, and this is yesterday quotes. We can say that 2130, the average curve is 41 euro megawatt hour. What can we expect as proxy for a developer? Base load 38.5, 3.5 euro margin, and then if we go to as produced, very typical for PV, we should discount like 4 euro, depending on the view of the shape factor. No? So this is just order of magnitude of reference. Again, this is purely market-based, purely this can be 1 or 2 euro above or below in a couple of months, depending on the volatility. But this is a very important source, but not only. We have to take into account to make a good, robust pricing for our models, the regulation, the PENIEC, the expected mix, and also we have to at least benchmark what forwards market are saying with models. Obviously, we are always advising to our partners, take scenarios, many scenarios, and weigh them. Don't believe only in the most resilient, in the worst, etc. Weigh them. You see here in this example, many prices, 2020, 2050, from different sources. On this, Alea, it's an excellent, let's say, theoretical, has a strong theoretical knowledge on what may happen, because they follow this reasoning of giving a range. No? So we think that by reasoning like this, we can really have a very good flavor on where the market may be in 10, 15 years. Other than that, don't forget that PPAs are very complex. Price is one issue. Only this chapter you see price, but there are many things to negotiate. Very complex contracts, and guarantees, clauses like change in law, termination are key, and they can be even more complicated than agreeing on prices. And then last idea, don't forget that PPAs are enablers. PPAs are putting together banks, developers, people modeling, etc., to push business for all of us, to co-develop, to co-construct. I highlighted here Alea and Sabadell for good reasons in this call, but it is very relevant to see, at least in ENGIE, we don't see PPAs as a one-shot, contract. We want to create as much industrial value as possible through PPAs, and this is why we see PPAs as an enabler. Thank you very much. I don't take, sorry because I take a bit of time, and you have here my reference. Happy to help you from ENGIE on whatever we can be of any help. You can see here some references of deals, and even during COVID, we have done deals with Fotovatio. You can see here deals with developers. This is public information. Deals with downstreamers, Adiseo, Liquid, Lactalis. Some of these, they have been done during Q2 and Q3 2020, showing that there is a clear recovery after COVID. Thank you very much.
Thank you very much, Daniel. So we will start now the Q&A section of this webinar. We will try to answer as many questions as possible in the time we have left. But I believe Uriol already has a question. Uriol?
Yes, thank you, Alejandro. Yes, I have a couple of questions. I will answer the first one and then let the other speakers. The question is, from your perspective, why did we see such a rise in power demand in Germany at the beginning of this week? Well, probably the question is about power prices and not power demand, because I already checked, and power demand in Germany is basically the same as the previous week. But power prices are the one that had huge peaks during the beginning of this week, not only in Germany, but also French and all the connected markets. Not in Spain, because the Iberian Peninsula was kind of isolated due to the, let's say, low connectivity with European markets. But basically, as always, it's not just one factor, but combination of several factors. At the beginning of this week, there were very hot temperatures in Central Europe. This make the electricity demand increase, not in Germany, as I said, but mainly in France. The French market is very sensitive to temperature. So there was a very large increase in demand in France. And then also hotter temperatures brought very low wind energy. Also, nuclear productions had some issues in France. So basically, combination of several factors lead to these huge peaks in prices.
Thank you, Uriol. Roger, I see that you have already answered some of your questions. Do you have any remaining question?
No, just to mention the question that it was asked, if there was any significant change post-COVID regarding financing, and as I wrote on the Q&A, there hasn't been any really significant change. Obviously, we adjusted to the power curve, and especially the transactions with the PPA, there hasn't been any significant change in terms of maturity, debt size, debt percentage, or so on. In the transactions merchant, pure merchant, there has been a little bit more change, but we continue to do financing, and so we have a lot of projects in the pipeline which are going to go through.
Thank you, Roger. Uriol, I believe you have a question.
Yes, I have another. Am I mute? No, okay. Yes, I have another question. It says, in a previous seminar, you showed how demand fell in the 2008 crisis and how it recovered afterwards in each country. Do you expect a larger fall in 2020 than in 2009? And do you expect a similar recovery? Well, yes, it was. There was an interesting slide that I don't have right now, but basically we were showing how in 2009, in the electricity demand fall in the European countries was around 5% in most of the countries. In Germany, it was a little large fall. In France, it was a little less, but it was around 5% in most of the countries. As I showed in the demand forecast for Spain, we are also expecting around a little more than 5%. Obviously, the overall of the year, it's similar, but the shape of this fall is very different. In this year is basically a huge drop in Q2, in March, April, May, and basically a rapid recovery as we have seen. So the global of the year, it's basically around 5%. In 2009, it was quite different. Demand started following in September, October 2008, and then it was a continuous drop. So globally, the demand fault is the same, but the shape of this fall is quite different. And obviously, this will affect how the recovery from the previous crisis of the demand was very different. Each country followed its own path. Some countries never reached previous demand levels. Some of them already did in 2010. So basically, it will, at the long term, we are expecting the demand will grow. And in this case, in 2021, maybe not, it is not the year, but probably in 2 or 3 years, we will see again the same demand, the same level demand.
Thank you, Uriol. Daniel, I believe you have some comments.
Well, no, in terms of Uriol, I fully agree, or we fully share exactly same views on demand. We think that there has been a punctual stress in certain markets, and as IBD is an isolated one, basically we are not following. Basically we share the same reflections on the views on the demand and the views on the prices. Yeah.
Okay, perfect. So we will answer the remaining questions directly by email. Thank you again, Uriol, Roger, and Daniel for the presentations. They were really great, and the audience for joining. Have a nice day.
Thank you very much.
Thank you.
Thank you very much.
Bye-bye.
Bye-bye.